The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you miss an episode, you can catch me on Spotify. You can catch me on Apple. You can go to my website, themainstreetcode.com, and see all the past episodes. And I look forward to talking to you today about what we do. So we are experts in the area of life insurance, annuities, disability, long-term care, and life settlements. And we are planners, and we help other agents and attorneys and CPAs across the United States with insurance planning. We're completely independent, representing over 30 different insurance companies. And when we design a plan, we design it for you, not for anybody else. So we try and be solution providers for any of your insurance needs. And that's what we do every day. In addition, if you don't have a financial team together, we help put one together for you so that all of what you're doing is in sync with what everybody else is doing. And it's a big task to take, but you know, sometimes we go in multiple directions, and it's really good to have everything in one place where we know where everything is. Today, I really want to focus on talking about, for those of you that do have life insurance or insurance in general, to look at it and review it. You know, in past episodes, I've talked about looking at your statement and how to look at the statement and how to know if your policy. Now I'm going to tell you very specifically, you need to have somebody review your policy with you. Last month, there's another insurance company that left the life insurance business, and that's American National. And it's a great company. I love American National. Their focus is on, they're still, just because they left the life insurance business doesn't mean your policies aren't active. It means they're not issuing any new policies. So while they still have those policies, you need to look at them. Because here's what happens, particularly if you buy term insurance, and you buy from, let's say you bought an American National term policy. Well, they may have great conversion privileges, and I want to talk about conversion privileges in a minute, with their policies because they have things to convert them to. But historically, when insurance companies leave the active business of running insurance, they kind of limit their conversion opportunities down the road. And conversion opportunity is very important. What is a conversion? And let me go into that. So, the least expensive way to buy life insurance, especially when you're younger, is term insurance. The unfortunate thing about term insurance is term ends. Very much, there's people online like Susie Orman who talk about, buy term, invest the difference. But, that's a fallacy, by the way. And I'd be willing to debate Susie Orman any day of the street. If you're a fan, that's great. She has some good qualities. However, she is extremely misguided and misguides the public in telling them to buy term and invest the difference. Because two things happen when you get older. One, you develop sicknesses and illnesses and things that may make you uninsurable or make you very rateable down the road. So even though you're trying to leverage your term insurance for future, only 1 to 2% of all term insurance policies actually pay a death claim. Only 1 to 2%. Think about that. So yes, it's important that especially if you have young kids and a family and you want to protect your family, term insurance ends. So if you buy a 10-year term, it really ends in 10 years. What happens in year 11? Well, year 11, they may keep you, but they may say, okay, your price is going from a very small amount to a very large amount if you're going to keep this term insurance, or it may just end and there's nothing you can do. 20 years, the same thing. 30 years, the same thing, like paying rent. You buy a term length, like a lease, and at the end, it's bye-bye or pay a fortune and we'll let you stay. So that's problematic as we start to get in our 40s and 50s and 60s and 70s, where it may or may not be convertible anymore. Now, some of the policies, some, not all, will convert to a permanent policy, meaning it'll last to age 100 or 80 or 90 or whatever, without any evidence of insurability. What does that mean? So if I buy $1 million term insurance when I'm 20 and I'm in great health and I can leap tall bounds and leap buildings in a single jump and run faster than a speeding bullet and everything's great when I'm in my 20s and I get a really inexpensive price to buy $1 million of coverage and I got a young kid or 2 young kids and a wife and it costs me $30 a month or something stupid. Okay, now all of a sudden I'm in my 30s and I gained a little bit of weight. Maybe I got a little diabetes. Maybe I got high blood pressure. Okay, maybe I got a little dad bod going. And guess what? All of a sudden, I want to make that insurance last a little bit longer or last forever. And I got a little more money because I'm doing well, but I've got more responsibilities. So a good term policy will allow me to convert it without taking any medical. I get to use what my health was when I was in my 20s to convert it to something great. So that's very important. Now, let me tell you what's happened in this market. And it's happened all over the country, but particularly in New York. American National, which had a great term product, got rid of their term insurance. But if you have an American National term product, they're going to limit you to what you can convert to when you want to convert it. Now, they might have 1 or 2 good products today, but historically, once a company leaves the insurance market with new policies, they then change what they're going to be able to convert it to in the future. And I'll give you some classic great examples. MetLife, one of the biggest insurance companies in the world, decided we're not going to issue any new life policies. Now, if you have an old MetLife term or you have an American National term, you need to call me if you want to make it permanent, or you want to make it permanent down the road. You're going to have a problem. I'm telling you right now, as I'm sitting here, this is a problem. So here's what happened with MetLife. They originally had some good products to convert to, this and that. Now, the only product you can convert to is a whole life product, which is a very expensive whole life. And now, even if you were at best class and you were super healthy at 20, the conversion product has you at a class that says, hey, you got diabetes and high blood pressure and heart, and that's our price. And sorry, but that's our price. And it's the most expensive product. And by the way, the whole life doesn't really pay good dividends, but it does keep you alive. If you want it, you got to pay for it. That's all we got. And you're stuck with it because that's what happens when these companies leave. So let's talk about the companies that have left. So if you have any of these policies, let's say you have a ReliaStar term, which became ING. Okay, it's a problem. There's one lousy product to convert to. You have a Met product. That's a problem. American National, not a tremendous problem, but will be a problem very shortly. Mutual of Omaha left the state of New York. Lincoln only has a conversion product in New York. Very expensive. John Hancock, if you didn't convert your product in the first 4 years, they only have a very expensive conversion product, even though they're still operating and doing business in New York. So these are the things you have to consider while your policy has to be reviewed on a regular basis. And you have to, even if you have term insurance, you got to look and give us a call and say, hey, do I have the right term? Do I have the right policy that I can convert to? You're listening to the Main Street Code for Financial Success. Excuse me. If you need to reach out to me, 631-647-4694. Thank you, and we'll be right back after a break. Take care. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and if you were listening before the break, we were talking about reviewing your life insurance policy and how important it is, because there are a lot of companies on the move, and they have been on the move. And here's what happens to your policy. So recently, American National pulled its life insurance portfolio from the market for offering new sales. They still will service your contract, but I really focused before the break on converting it to something permanent. If you have a term insurance policy, that there will be, they have certain products you can convert to, and then as time goes on, very limited products to convert to, as we have in the market if you bought ING, ReliaStar, Lincoln, Mutual of Omaha, John Hancock, Metropolitan. So if you're sitting with any of these term policies looking to convert them at some point, give us a call, because you may or may not have anything good to convert to, and it may be a time to say, hey, maybe I only can afford term, but maybe I need to up it to a company that I know that I can have on a keep. So here's what else happens when these companies leave the insurance market. Many times, although your policy is still in effect, they will sell that book of business to a reinsurer. Reinsurers are basically around all the time. Reinsurers, actually, when you buy $1 million policy from somebody, it may or may not, even though it's underwritten by an insurance company, a reinsurer backs up the death benefit. So it's not on, the insurance company is on the hook for the whole death benefit. Now, that's not in all cases, but it is in many cases, especially on larger policies, that a reinsurer is involved in the decision-making on offering you coverage. When a reinsurer buys the book of business, the book becomes serviced by some other company than the original company you bought it. Why is that important? Well, let's say you didn't make a policy payment. Who's going to notify you? And a policy, I've seen many policies lapse. As a matter of fact, I get calls every day, every single day, about people who have bought policies in the past, and they want to know, is the policy still effective? Are my premiums up to date? Am I paying enough for my policy, particularly my permanent policy? These are questions we get every day. Now, if you call the insurance company, many times you'll get directed, you'll call some 800 number, you'll wait on hold for 15, maybe 20 minutes. You may get somebody. They may or may not be in the United States. Often the case is they're not. Sometimes they have call centers in the Philippines, in India, and quite frankly, wherever it's cheapest. They may or may not understand your question or know what your question is, or you may not have the right question to ask, and they may give you misinformation, and you will never know. That's a big problem, okay? What's a real problem is if your loved one has passed and you're trying to get that death and you're trying to make a claim on that policy, try and find somebody who's going to help you. That's a big problem. So if you have one of these policies, I don't care what company it is, and you have to dial an 800 number and you don't have a good advisor helping you, good luck. Waste hours on the phone trying to find out. Let me tell you some of the problems we're running into today with companies that are established. We still run into. Somebody passes and they said, well, I had 3 different policies. I think Dad had 3 different policies. Well, they find out that Dad didn't pay his premium on a policy. Okay, out of luck, boom, you get nothing. Or here's another scenario that happens all the time, very infrequent. Well, Dad had a policy on himself, but we find out, but the owner of the policy we're not sure who owned it. Oh, it says the estate owned it. The estate. Okay. So the insurance company says, okay, you've processed the death claim, and we help you process death claims, by the way. You have to get copies of death certificates and many insurance companies, it's an easy process. Many, it is not an easy process. Okay. It's just not. They give you a hard time. All the ducks have to be in a row. Everything's got to be dotted. I's got to be dotted. T's got to be crossed. So the insurance policy says the estate of. If they send a check to the estate of John Jones or whoever it is, okay, who is the trustee of the estate? Where does the money go? So typically, they'll send a check to the estate of. Then you have to go to court. It may take you 6 or 8 months just to get a court date, and then you got to fight over the money as to who it goes to. Because it just says the estate. Well, the will says this. It makes no difference what the will says about where that money goes. The will has nothing to do with it. An insurance contract acts independently as to where the money goes. If you say money goes to my wife, okay, then the money goes to your wife. That's where they write the check. Now, let's say you're divorced and you never changed the death benefit to go to your children or to go to your new wife. Well, guess what? They're out of luck. It goes to your wife because you never changed that document. Shame on you, but that's the way the law is. They bypass wills and everything. Otherwise, it goes to probate. Now, you want to probate a death claim and put it in the mix, and you think lawyers and accountants are expensive now when you do the planning? No. They're really expensive when you go to probate, because when you go to probate, you're going to court. And when you go to court, you can have a long waiting list, you have to hire an attorney, and then you have to fight for whatever assets are there. That's the truth. So even if you don't have a big estate, or you don't do estate planning, you don't think you have an estate, you have an estate. An estate, everybody has an estate. So if there's a check that goes into that estate, now it has to go to probate. And now they have to determine, the court's going to determine, the court, not you, not your kids, not your spouse, where that money goes. That's a problem. Okay? We don't want you to go to probate. That's why we set up life insurance trusts. That's why we're very clear on the beneficiary documents. But most clearly, that's why your policy has to be reviewed. Now, here's another thing that's happened more than once, especially with older life insurance policies. For some reason, you don't have a copy, and most people don't, of the original life insurance policy that was taken out. It's not in a safe. It's not in any safe place. Your attorney doesn't have it. You can't find it. Okay? On that contract, it says who the beneficiary is, who the owner is. Now, the insurance companies may or may not have a copy on file. Now, it's illegal. It's wrong. They should be sued. It's absolutely ridiculous that they don't. But if they don't have the actual beneficiary or the owners on file, they're just going to write out a check to the estate of. This is what they do. This is a big problem. Huge problem. You got to get this stuff squared away before you go and claim. Now, even if you did everything right, remember I said you got to call 1-800, find the insurance company and find somebody who really knows what they're talking about? Good luck with that one. We have struggles with it, and we know what we're talking about. And we've been put on hold. We do get the answer. We get the right answer. And when we don't, we fight the insurance company till we get the right answer. To be honest with you, I just recently had 3 different owners own a policy according to the insurance company. Now we're sending it to the wrong people. We found out that they had made changes and they had different computer systems and had the wrong owner. They had the wrong date of birth on both participants of a life insurance policy. We had to have that corrected. Thankfully, the insured never died, but if we didn't do this up front, what a disaster it would have been. It's the kind of things we get involved in. Unfortunately, yes, we do sell insurance policies, but we follow up and make sure that they work for you and you can get the claim when you need it. You've been listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. You can hear me every Friday. If you want to get a hold of me the best way, 631-647-4694. Have a great day, everyone. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.